Good day, ladies and gentlemen. I hope you are enjoying your weekend. Gold had a critical week, testing its primary trend line. Today is January 23rd, 2021, and I'm going to cover gold and US dollar index. Let's start with gold. On a weekly basis, gold added 1.6%, closing at $1,855. The passing week was quite critical for gold, as it was testing 18-month primary rising trend line. Gold fell as low as $1,805, where it held and bounced back up from the major rising trend line. Interestingly, a number of support lines crossing in a single point also targeted $1,805 level, which appeared to be a low for the gold. So, where does the support and resistance come for the gold over the coming weeks? Let's switch charts. Gold price is contracting between the major rising trend line and the upper band of the flagship formation. Support comes at the primary trend line at 1815, 1825, resistance at 1865, $1,875 level. Although the apex of the triangle targets the middle of February, the resolution to the pattern is likely to come in the first days of the next month. For the next week, I expect gold to largely range trade within a contracting triangle. I have not covered the dollar index for quite some time, and today I would like to briefly discuss the most recent developments. Let's start with a quick recap. Dollar index has been in a bull market for the last 10 years, trading above a primary rising trend line, which it tested numerous times. However, in June of 2020, dollar broke the major rising trend line, and since then has been in a falling trajectory. Let's switch to a daily chart. Since previous peak in March of 2020, dollar index lost over 13% and presently trading around $90. A 9-month decline has been quite steep, where dollar was trading within the falling wedge pattern. I believe that the dollar has very little room to fall going forward. However, my standing target of $88 is likely to materialize. Surely, markets do not move in a straight line, and this rule applies to the dollar. The index is likely to break the falling wedge pattern upside over the next 4 to 8 weeks, just like it did back in 2018. A snapback should ultimately take dollar to $94-$95 region, towards previously broken support line, which should now act as a resistance, following which the index should top and roll over into the second part of 2021. So the key question is, what would be the implications of a short-term dollar strengthening to gold price? Let's bring up the gold chart. Assuming further drop in the dollar index towards $88, gold could rise as high as $1,950, $1,975 level. On the dollar snapback to $94, $95 level, gold could drop back to test the primary rising trend line, once again at $1,800, $1,825 range. As dollar index tops and rolls over, gold is likely to continue advancing higher to challenge its all-time high at $2,075, perhaps sometimes in the second half of 2021. Here I have to mention that dollar index and gold are not inversely correlated all the time. Therefore, it is quite possible that dollar strengthening could have somewhat weaker impact on gold price, given so much money printed over the last years. This is it for today. Please note that this video is not an investment advice and prepared solely for educational purposes.